Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, over the last 12 to 24 hours, the Australian dollar has managed to move further away from the level of 73.7085. As well, the greenback also rallied up to a fresh May 2020 high of 100.40. This all occurred after the US CPI was released for March. The US Department of Labor reported that the Consumer Price Index rose by 8.5% in March. This is the fastest 12-month pace since 1981. From the previous release was at 7.9 annual rate in February. Although the so-called core CPI fell short of his estimate at 6.5%. Traders now look towards the Australian unemployment rate due out on Thursday, with the preliminary estimate that Australian jobless rate could slip to 3.9 from previous print of 4%. Looking at the technical aspect, we do have a bullish outside range day, but no confirmation as of yet. Nevertheless, if we do see a break that is above the region of 74.70.75, which is only 25 points away, could see an extension up towards 75.30.35. Overall, though, the market has improved since the rebound, but I would like a little bit more confirmation to support the bullish call, and maybe just breaking 74.75 could be that. Nevertheless, a rejection from there still keeps the bullish foundations, as I view it, from 73.70.85. The euro still remains somewhat heavy. As I mentioned earlier, the dollar index did get a fresh or post a fresh high around since May 2020 of 100.40. In light of the pattern, it still looks like we are heading down towards this region of 107.50.85 and reassess from there, as I do anticipate possibly, like we saw here, some profit taking, which could again be revisited if by the bulls if we see this downward test, as we are oversold, so therefore may see a short-term bounce. Looking at dollar yen, we've got a doji at the moment, which is indecisiveness. Now towards 125.70, I do anticipate that we could see a bull trap, and therefore if we see a break somewhere around 124.70.80 area, could see a significant downturn towards 121.5, but we do need to break this broad trend to support that call. Sterling's still a little bit weak as it wears away the support level of 130. With minor support now at 129.80, I still anticipate I'm not going to abandon the call as of yet, as we could still see a rise from current levels or just a little bit lower towards 130 to 132. Sterling Kiwi, well, after that sudden rejection from 191, the market has rebounded from 188.5, and from the rebound looks back towards 191 again. Let's see if the market can continue, as the midway point has rejected the level, as you can see here, of 50, and therefore could see a further climb up towards 192 as the present call. Gold has edged higher, and at this point in time, I'm a little bit skeptical of how far this market can go due to the lack of strength from the MACD, and along with that we are overbought. So therefore another failed upside attempt could be seen, like previously focused that we can see here from around early March. If so, a break of 1,946 would ignite the move down to 1,900. Finishing up with oil, well, the market jumped just over 6% overnight after reports from China that they've started to ease COVID restrictions. Nevertheless, from the current break back above 97 may see a rise up to 103 and then maybe another down test, with the base still holding around 92. Well, that's a wrap for the day. Thank you very much for joining me, and please keep an eye out for the intraday report.